Miro, this week, proponents of short-term vacation rentals caught a break when the San Diego City Council rescinded some regulations that they passed in July. What might this mean for San Diego tourism?
Well, on the whole, not too much, but what short-term vacation rentals allow tourism to have is actually a lot more tourists. Instead of just staying in hotels, they can stay in homes. The impact is interesting because this recension was driven by proponents of short-term rentals. It's driven by Airbnb and HomeAway. They did a petition that got over 60,000 signatures and forced the council to make a decision, either rescind the regulation or put it up for a vote in 2020. The council opted to rescind the vote and really try to negotiate with all the interested parties and stakeholders to come up with a better set of regulations. But until then, if the city attorney has her way, there would be no vacation rentals because the municipal code of the city of San Diego does not permit, from her interpretation, short-term vacation rentals. So in theory, if the city wanted to enforce this, there would be no short-term vacation rentals, and the big beneficiary would be the hotels.
So moving on to a recent consumer report regarding automotive reliability. American-made cars didn't fare so well in this report. Can you tell us a little bit about this report and what it could mean for sales?
Well, it couldn't come at a worse time for U.S. auto manufacturers. This Consumer Reports study every year on auto reliability, talks to 500,000 customers who respond to very detailed surveys about the performance of their car. And for the first time, there is no U.S. car manufacturer in the top 50% of these of car manufacturers. The highest rated auto manufacturer is Ford, coming in at number 18 out of 29 manufacturers. General Motors and Chrysler take the brunt of it. They're in the bottom end of this spectrum. And Cadillac, which defines American auto luxury, is number 28 of 29. The impact is really significant because for the last 4 months, auto sales globally and in the United States as well have declined. And so as consumers are looking at buying cars, this is going to impact their perception of U.S. brands. So it's a tough week for U.S. auto manufacturers.
And speaking of a tough week, it's been a tough month for the stock market.
Yes.
Is it time to worry?
We definitely are now in correction territory. This has been following the last couple of weeks, this week has been really a whipsaw for investors, starting with a huge decline on Wednesday. Is a nice little pickup yesterday, and today we ended the week down an extra 300 points. What this means is that both at the NASDAQ, all the tech-heavy stocks, and the Dow, we have lost all the gains that we had from the beginning of the year. We've lost more than 10%, so we're in that correction territory for investors. And so investors have to be very careful as to deciding where they want to go. The U.S.-China trade issues are weighing on investors. Brexit is weighing on investors, and inflation is weighing on investors. And you can only imagine today, the U.S. government issued their GDP growth for the third quarter, 3.5%. That is a huge number. Why did the stock market drop 300 points? Because all the growth was driven by consumer spending and government spending. U.S. businesses pulled back on spending. So the best we could say so far about the tax cut is that it had an impact in the first quarter, and we're not seeing the kind of hiring and the kind of investment by businesses that really should carry this kind of bull market on for another year or two. And the last thing, economists are talking about recession in 2019, and I think that's spooking investors, and I think we're going to still have a little bit of ups and downs over the next couple of weeks.
Well, we of course will continue to follow this. Mira Kopik, thank you so much for joining us.
Thanks, Ebony.